So hi there. Today I'm going to be I'm going to be analyzing the Euro CHF currency pair, this currency pair right there. I'm going to be analyzing this currency. Let's see the simple properties. So here's the margin, that's the pending others, and that's all that information. So I'm going to be analyzing it, and at the end of this video I will have opened the position, and I'll let that position stay open till it closes, because it will be following a train of thought, and that train of thought will be there as a guide to future positions. So here this is the chart, the EURCHF, the 1 week time frame, and according to the 1 week time frame you can see some trends. So let me start highlighting them. Wait, first let me remove all this so that I can highlight this new trend. So let's first start with the bearish trend from here. And that is very good. And that's the bearish trend, and that bearish trend stabilized right here. So one would have expected that that point, that after that bearish trend there should be an impulse bullish, and here it is, that impulse. Let me put the vertical line on that impulse bullish after that bearish trend. So here it is right here. But this impulse just came immediately after that bearish trend. It was just a reaction to the bearish trend, but not an essential of a creation of a new trend. And it was immediately met with some bearish trend. So immediately after that, we'll highlight more trends from there. So here's the bearish trend that met it, lasted till there. So after that, after this bearish trend, there was a stabilization for about a month or two. That horizontal green line you see on the screen, and then there was an impulsive bullish that was expected because of the bearish. Things just don't fall; they fall and rise. They rise and fall. That's the fluctuating nature of the market. So right now, then after that, there was a bearish that broke below the green line, the previous stabilization. So that was a support. Then it broke below the support to a new point. So let's put a green line at the new point it's created by breaking the previous support. That is this point. So that point was created by the breaking of the previous point. So now let's check. So in the middle between these green points, you can see an horizontal line right here. That is the current price. And let's check back in time when price behaves the way it is behaving today. Because you see, in as much as life is continuous, it is repetitive. That's just my argument anyway. So if you look at the graph right there, let's go back a bit. That might have shocked some, even me included. So let's see here. The current trend seems to be bearish. The black icon there. So that's a bearish. This is the 1 week time frame. So that trend seems to be bearish. And if you can see the nature of the fluctuation, it seems that it was expected to stabilize. But if you look back, let's go back and see what I just saw previously. When you've seen, is come back here. You see this point right here. This point, I don't know what was associated with this. Is it back in 11 January 2015? Don't know what was associated with this point, but the price drastically dropped. Like a crazy drop. Not just between the two green lines like you see here, but it dropped to crazy lows. I don't know what happened. Maybe I'll check what happened on that date so that I can see the event. This must have been a social driven decision, an emotional decision. This is not such strategic, because if you look at the graph, it beats all the odds. I know. Let me put a vertical point right there. Right there. So if you notice something, there is a point here that seems to be the expected high. Right here, that's the expected high, and it seems that the price is fluctuating at the current low, that is a normal low. Forget this previous crazy low. Right here, price has dropped to right here, this between the green line. Now the question is there, this is in 2022, 24 April 2022, that's the date of today actually. And back in 2015, 11th January, price broke below the green line and didn't just break like a little. It went crazy, full, like a flash. But then there's a new resistance, and this is the resistance here. Let's put a green line as there. So it broke like a flash, and it went until this point right there. And then you might wonder, you would have expected that after that there must have been a restabilizing, and then that happened because you can see. Let me change the time frame so we can see something here. That initial, that's the current, let's go back. Remember that point that had a crazy drop? Just look at it from a 1 day time frame and see how it looks like. It was in 11th January 2015. Say 2015. Go to January. There it is, 9th January. Here's the point. Right there. More precise. So that's the fluctuation nature. But now if you see that point, you see there's a new point here. That's how the nature of the point looks like in a 1 day time frame. So it's still crazy, not like it was over exaggerated initially. And you see after that point, the two green line takes over. The between one, not the big one, the small one. And this is the highest one. When you go to the present price, same is the case. The price is below, is on a discounted price. We have a discounted price, but you don't know discounted to what extent, because you see, remember the previous crazy bearish. So this asset looks crazy, and I know it's really risky for me opening a position here. But just to mention, my leverage is 1 to 500. So yeah, I'm putting my money where my mouth is, for that matter. And for this position, for me to put my money where my mouth is, I need to have some good faith. Yeah, some business good faith. So let me go back to see where I can find it. Because there has to be somewhere we meet in the middle. and say if price comes to this point, get me in. It's worth the deal, it's worth the money. And if it doesn't, then keep me out the market. That's the essential argument. So if you come back to this point, but the checks behind it, let me see back. If you see that this is between 30th December 2014 and 2nd September 2014, the straight line. 2014 is a crazy year. Even in that case, if this was the graph at that point, I should have expected such. So it seems to be a valid, because if you see at the prerequisite of that position before the crazy, it seems to have hinted on a crazy future. In fact, I would have even placed a position expecting one. Just to say if I was aware of FOREX at that time. So let's see. This is the previous upper one, the one that flattened. The one that flattened. Let me see. So you see the green line. If I go, yeah, the highest green line is there. So this is the price when the price was highest, and this was back in 2012. I don't know why. But then before 2012, what is here, price was flat out. You can see here. Then something happened in August 23rd, 25th, 2012. Then things changed. Something happened between euro and this current EURCHF. Not sure which it is. I'll confirm the symbols representation and post in the description. So you can see the whole point. There seems to be a turning point here. But that turning point doesn't seem to be that clear. If you see here the previous turning point, I would have wanted to enter right here. Let me put a point, a horizontal line there. Wanted to enter right there. That is initially. That is the point I would have wanted to enter really bad, because that point will have signified good returns. And seeing where the price is now in that point, I would say that's a good point to anticipate, and that was back in 2011. So let's say I've gone back in time, taken advice from my 11-year-old version of me, and I say, Ken, if price gets to this point, get in, and get in for what? And I think bullish trend will be a better position considering the graph representation at that point. So if I go back a bit, yeah, the bullish trend stands out. Just seems to be obvious given the presumption of taking. The bullish trend seems to be an obvious position there. Even if you can see, yeah. So given the mentioned above assumptions, so let me take note of this position, because think you've already decided. Let's put a open position on and see if you can go and see how it looks like. Yeah, let's do that. So that point is 1.00799. I can go with it up to and I can go below to Let's say that's too low, too low. Say, yeah, I think that's reasonable, but it is even ambitious if I can afford to stay that long, given it's a Swiss franc. One lot is 100,000 euro. So let's open the position. See it goes through. It went through. Let's see what it looks like from the chart. And that's how it looks like. Set a buy limit at that. The take profit is a bit lower. I wish it would have been at 1.08. 900, 1.08 900. So let's make that edit. Yes, 0.0900. Confirm the position. Yeah, that looks good. That looks good. So let's go to the current time. Let's see how it looks from the front. We have set it based on the past. Let's position it open based on the past. But how does it look in the present? And here that looks. So the buy limit is right there before that previous, and it seems to be a reasonable buy limit, because if you look at it now, it seems like it was how it was meant to be if you look at it from the 1 day time frame, and the take profit is above because it's of course higher. So let's go back and check something out. It is risky because now the bearish might come strong and go below. But since you've checked the past, let's check the time frame on a bigger one. And see the stop loss where it is. That's where the take profit is, where the trend began. So it is rather meant to be. And where is the stop loss? Let's see the stop loss. There it is. Stop loss is somewhere around there. So if I look at it, pretty reasonable position, even though the stop loss is bigger than the take profit. It's pretty reasonable. And let's for the viewers who are watching with me and investing with me, please tell me what you think about it and how you think I should modify it, right? How I think I should change the position so that you can both look back at the result and say, yes, we clearly thought things through. Because one of the biggest challenges in investing is making impulsive decisions, not strategic decisions. So according to this position, I think it is strategic. If you look at the 30-minute time frame, 11 short or time frame. So previously there was a bullish. So you see the bullish went up and there's a slight bearish retaliation. And okay, I'm looking at it and saying, okay, I don't know what we intended, but okay, let me see it from the 4 time frame. And you can see, yeah, there's still bearish trend from the 4 time frame. But it seems to be stabilizing. But I'm putting my buy limit down below here, because I don't know, maybe it might drop lower. But if it doesn't, then I'll have to put a buy stop. Maybe, yeah. But let's let it play. That will be a different position, the buy stop, because I can't put 2 in 1. Let's let the market play out. then we'll see. And subscribe, hit that like button, like button if you like it, the dislike if you don't like it. Comment if you like something to be explained more better. Maybe the voice is not clear, maybe there is background noise, maybe there's something you didn't want on it that is in it. Maybe there's something that is in it that is not in it that should be in it. So yeah.